Good morning, ladies and gents. Um, I'm just gonna break some down to y'all this morning about whole life policies and other investments. Well, I'm not gonna say other because a whole life policy is not an investment, but um, a lot of people, you know what I'm saying? I heard people saying, why get a whole life policy if I can invest in the real estate and get a bigger return? Because a whole life policy might earn you 4%, anywhere between 4 and 5% annually. It compounds. You know, it's not like a super high um, earnings, but it's a lot better than the bank account, and we all can agree. Um, Not only is it a higher earnings than a bank account, it also is accessible. And when you do access that money, the entire amount that you put in will continue to grow, even if you access half of it to use for something. It's not like a bank where what's left is what earns. With whole life policy, if you dump 100,000 in that policy, you go and borrow 50 on your cash value. The entire 100,000 will still earn that annual interest while you use that 50 to do whatever it is you're gonna do. But back to the subject. What should you do? Whole life policy or stock market or real estate or your business or whatever? Because people say, I can get a higher return a lot of places. Why get a whole life policy? But what they don't understand, it's not apples to apples. It's actually apples to oranges. You know what I'm saying? The whole life policy, like I say earlier, is not an investment. It is pretty much like a savings account on steroids. It's a souped up savings account, flexible savings account. You're able to use the money to invest into other things. So the answer, whole life policy or an investment, the answer is both. The whole life policy is a foundation for your investments. It's a foundation for your whatever you're going to do. Some people just pay off debt. They might have a 15% interest rate loan. So they may say, well, I'd rather pay it off at 6% or 5%, whatever they charge you on the money for the whole life policy. So if you have $10,000 on the balance on the loan and you decide, man, it's 15%, I'll take a policy loan at, let's just say, 6% interest, and I'll take that and pay off my 15% interest rate loan, drag that over here to the whole life policy, and then I just pay that back at 6% versus 15%. You see, so what you're actually doing with your whole life policy is you're using your money more than one time. That's what you're doing. And it continues to grow while you use it to either earn more money with that money, or you're saving money on for paying down debt. So it's the foundation for whatever you're gonna do. You know, somebody told me and how they explained to me, and it made a lot of sense. This is the foundation. The whole life policy is the foundation to building generational wealth. So you get the whole life policy first. You fund it with your money that just laying around. It's not your money that you pay your bills with. It's not your money you need tomorrow to go and do whatever you're going to do with. This is your money sitting around in the bank that's not doing nothing. It's when you go invest to the stock market or invest to real estate, you're going to take money out the bank and pay for that real estate or invest into whatever. Instead of it sitting in the bank until you're ready to use it, you sit it in your whole life policy until you're ready to use it. And it earns. And it will never stop earning. That's the point of putting it in the whole life policy, that when a dollar passes through the whole life policy, it continues to grow forever. It never stops growing. Unlike a bank account. Just think about all the deposits that don't hit your bank account over the years. Just think, the last 10 years, 20 years, whatever. Just look at all the money that was dumped into your bank account, direct deposit, whatever. Your savings that you just slid over the savings. Let's just think about that part. And all the money you put in your savings and said, that's what I'm just, for a rainy day or for an investment. Just think about all that money that you put away in your shoebox, all your savings. If you would have took that money, all that, and put it in the whole life policy all these years, that money would have been piling up all these years, and it would never stop unless you withdraw it. And you don't have to withdraw. You can take a policy loan to keep it growing. That's another video. But my point, to stick to the script, should you do a whole life policy or should you invest? Both. Dump your savings into your whole life policy. This is your new bank account. And then once you decide what you go do, you take a policy loan, invest in real estate, invest in the stock market, you invest into your business, you pay down higher interest rate debt, you do whatever you're gonna do, but you fund your whole life policy first. Now, if you need help, you got more questions about this policy, because it's not just a simple, hey, this is what you do and that's all. I mean, it's so much you can do with it. But today I just wanted to break down a little bit, and the difference. It's not an investment. It's a savings. It's a flexible savings asset. It will grow your savings. And when you take a policy loan, you don't go buy liabilities with that, because you do pay the loan back with interest. But that's not a problem, because your money is earning interest. So when you take a policy loan, you buy an asset. The asset will earn. So your money is earning interest. The asset is earning interest. So the interest that you're paying back is getting covered. You're still bringing in more than what's going out. And the asset continues to grow. And as you pay the policy loan off, you still have the asset growing. You still have all of that money growing. And you do it again. You buy another asset. And then the end of the day, you have multiple assets, and that money that you've been putting in over time continues to grow forever. So that's a quick, just a quick briefing about the whole life policy being used in conjunction with buying assets or paying down higher interest rate loans. So if you have any questions, I can help you set up this policy. It does have to be set up correctly. It can't be the whole life policy that most agents will sell you. Those are traditional policies. Those are the policies that people say, stay away from whole life because it's too expensive. The traditional whole life. This is not traditional. But like I say, it does have to be set up correctly, and you do have to select the correct insurance company. I can help you with that. So no worries. Get in touch with me. I will explain it deeper, get you set up, and you'll have your foundation laid. Y'all enjoy your day. I gotta go make some moves. God bless.